in the numbers, and it kind of tells you what the price should be.
Yeah, we're live now, but have you used that before?
No, because you gotta pay, but it might be worth it, because if you could just plug in the numbers, you could kind of see what your buy price should be.
Yeah, it probably is. Hey, everybody, we're gonna do. We usually do Saturday live stream, but I'm gonna do it today because Saturday is New Year's Day. And hopefully, you're not coming just for the raffle, but we will be doing the raffle. I give away two $20 Amazon gift cards each live stream. I'll do it in like 10-15 minutes when we have more people. My friend John is here. He's the guest. He owns a lot of Tesla. And what other stocks do you own? Hey, Mark.
Alibaba, C Limited, Square, Palantir, and some other ones. Those are like the bigger positions, I guess.
Hey, Jordan. Thanks. It's a steady growth. I get like 50 or 60 subs a day. I like your live streams. I've been watching some of your live streams. So I'm working on Intuit. I just did a video on Kinder Morgan, the oil and gas midstream company. Waste Management, WMT. Hey, Harris, what's up? Walmart. WM is Waste Management. Walmart. Walmart's a great company. They're trading at their all-time high pretty much. I mean, you can't really go wrong with Walmart. What's up, Vib? It's one of those companies that you can just buy and hold. That's what I tell people. Just buy over 100 billion market cap companies. It's gambling when you buy these low cap companies. And there's nothing wrong with gambling, but you got to expect you're going to lose most of your investment.
Well, you gotta position yourself the right way. If you're going to buy smaller companies,
hey, Matt,
you got to manage the risk. Don't put in more than you could lose.
Right, exactly. Don't put. But if you take 100 successful investors, like people who made a decent amount of money investing, obviously it's relative to your income. Some people, if they make $50,000 over 10 years, that's really good. Other people, 500,000. So people who earn a decent amount over a long period of time, if you took 100 of them, 99 of them would have made money kind of with a slow and steady growth. Only one of them would have probably got lucky, like invested in like Dogecoin. And I mean, you could get lucky. You just have to know when to sell, which is the hard part. When you invest in a stock like Tesla, like this guy did.
That's the hardest thing for me, is when to sell. Because some companies, some stocks I bought and they went up a lot and I never sold, and then they, went down into a negative after a while. But you just never know.
Right. Because when you buy a good stock like a Walmart or a Microsoft, hey Ben, you don't have to worry about selling. You could just let it go, let it ride. Because those companies are just going to go up over time. But if you buy something...
Yeah, the big companies typically not going to crash that much either,
Generally, there's always...
unless something major happens,
But generally, those big companies are going to be around. And if they don't go up, they're not going to crash. You're not going to lose like 80%. on a really on a blue chip stock.
Right.
It's very rare. You may lose 30-40% if there's a market crash like everything else, but why not buy some stock that pay good dividends and use these dividends to buy small cap? You could invest, but buying a stock that pays good dividends is the same as finding a good stock that goes up in price.
Yeah, I rather get a good. I rather buy a good company that appreciates more. I don't really care about the dividends companies. The companies they pay dividends. Typically, those companies are not growing that much anymore, and they're not investing the cash. And to get like 2-3% dividend, I don't know. It doesn't make much sense to me. But for some people, it could if you have a lot invested, and then you could possibly, if you have millions of dollars, you could live off the dividends.
You have to remember, when a company pays a dividend, like this person, I don't know if I can find a comment. He's like, because I said in the video, I said, like this, I forgot what company it was. They paid like a 6% dividend. And I said, mathematically, if a company pays a 6% dividend, the stock price will go down 6%. And the guy's like, you're an idiot. The stock price is based off of supply and demand. It has nothing to do with how much dividend they pay. But if you have an asset, whether it's a stock or a business or a bond, if you extract cash out of that asset, it should go down by the amount of cash you took out of it. Like if you have a business that's worth $1 million and you pulled out $100,000 of cash out of the business, wouldn't it be logical the business is worth $100,000 less? And if you added $100,000 of cash to the business, wouldn't it be logical the business is worth $100,000 more? It's the same thing with a stock. If you pull the cash out, it's worth that much less, the asset. I do realize that market forces can push the price higher or lower than the dividend, but it has to. ARC Document Solutions, free cash flow cigar butt, printing services for architects, huge insider buys. Oh, everybody, Impossible Stock News, if anybody wants to subscribe to his channel. Vale pays a great dividend. Vale is a little risky. Not too risky, but it is a Brazilian company. And when you invest in developing countries, stocks in developing countries, there is a slight risk. Hey, Udar, how's it going? So we'll do the raffle. So just write, if you want to be part of the raffle, just write in the comments, I'm in or in. Because some people who aren't commenting, I don't know if you're here. If I see your comment, I could put you in a raffle. But if I don't see you didn't write a comment, then I don't have any way to know if you're here. Ed to A to Z, he won. And he could tell you it's legit. I do pay people. It's not a scam. Ed A to Z. I got my thing set up so it automatically calculates how many people are doing a raffle. Has everybody been watching my videos lately? I've been doing more editing, adding more stuff. I don't know. Mike Thompson. Do you think Genworth? I don't know. I got to look at them again. Jordan, I saw you had like 30 people on a live stream once recently. Does anybody see my background picture? People in 2050 still holding AMC short squeeze is coming next week. Sean de Oliveira. Mofeed. I got Mofeed. Stockaholics. Mark. Everybody check out Stockaholics. If you want to learn about tankers and the shipping industry, Stockaholics. It's one of the few channels I've learned something from. And that's not bashing any other channel. I'm just saying most people just kind of like talk about surface level stuff. He gets a little deep into understanding things. Is anybody else? I got 16 people, and there's 23. So the way it works is, this is a randomizer. You see, every time I do something and it changes. If you get picked twice, then you win. But it has to change. Like, you can't win 2 clicks in a row. Like, if it was 9 twice, it wouldn't count. That's how it works. And if you feel you received value of any kind from my videos, feel free to donate to the live streams so I can do more of these raffles. And continue making these videos. I want to do a discounted cash flow model the other day, and I thought of you. How do you pick the later year's numbers? What do you mean? How do I forecast the future cash flows? Is that what you're saying? Okay, so I got 17 people. Okay, so I'll do the raffle. And the winner you need to email me at this email address if you win, so I could send you the Amazon gift card. So I'm going to do it now. UN. Wait. It doesn't count. It changes every time I enter something, but it doesn't count unless I say it counts. So let's do the first spin. So this number is going to change. This number right here is going to change. 3. Mofeed. So if Mofeed gets another pick, he wins. So I'm going to do another randomizer. But if it's 3 again, it doesn't count. It has to change. 15. Mind. Who's Mind? Is there a Mind here? Oh, Mind. Mind Tracer. Okay. Okay. Let's do another one. 4. John. That's the co-host.
Oh, you put my name in there? I didn't know I was part of that.
Yeah. Ben, you're here, right? You're number 9. Okay. If anybody else want in, you could still come in now, because the winner has to get 2 wins, has to get picked twice to win the prize. So if you're here, because there's 26 people, I only have 18. Okay, so we'll do another one right now. 6, Matt H. Another one, 17, my favorite number. Hey, Aravind and Rajesh. It's going to change, but it doesn't count because I'm entering. Ben H. Coco, Aravind, project. Okay, let's do another pick. Oh, well, let me fix this before it changed, but it doesn't count. Okay, I think I got everybody who. Okay, let's do another one. 17 again. Okay, it's over. DL. We'll do another one later. So DL, make sure you email me down here at this email address.
Congrats, DL, on the big one.
Yeah, good job. Let me write a note. And don't try to scam me by saying you won. I have a way to figure it out. Okay, deal. We'll do another one later. Good job, DL. Yeah, we'll do another one later. But has anybody noticed the new editing? I've been adding some like kind of sound and well, I was always on the videos, but I've been doing it in the beginning of the end of the video, like video clips. And when I transition to a next topic, it kind of makes a noise and a screen splits. Has everybody noticed? I've been spending hours just to add that stuff in.
How long does it take you to make a video?
Like 7 hours.
Really, that long?
Yeah. Between setting up the Excel file and shooting it and editing it. Yeah. Sometimes it's quicker.
You do like one a day, or you do like multiple in a day to kind of knock it
usually
out?
one a day. It's kind of hard to get more than one in because I get kind of tired. I usually have time after a video, but I get tired and you kind of like get like you want to just do something else. Like it's like you just want to like decompress after doing it. Yeah, I just created it myself. I just kind of put together, I just Googled like discounted cash flow model and watched YouTube videos and just kind of like copied other people's or stuff I read. If you watch in the beginning, my first videos, it's a lot different than my model today. It was more archaic. I mean, it's not too much different. It's just more of kind of the layout in Excel is a lot different. Yeah, you missed a drawing. Well, for only the past 3 months, I've been using, like the past 3 months, I did not calculate the WACC. So for like the first year and a half, I calculated the WACC using the capital asset pricing model. But lately, I've just been using the WACC according to Simply Wall Street or Finbox. I actually show it. I'll bring up my Intuit, the video doing next. So, I mean, I'm just doing it to make it more transparent so people can recreate it themselves. So I just show you the WACC on Simply Wall Street's website and Finbox. Finbox is a free website, so anybody can go on it. Simply Wall Street, I pay like $20 a month, I think, for it. But Finbox is free, and there's a lot of free websites. So I've just been using these sites so people understand where I got these numbers from, because the WACC is a really important part of the model. You might say one of the most important parts. And it's so like arbitrary based on like a lot of things. But there's more of a kind of a calculated approach using the capital asset pricing model. Let me see if I have it defined here. Yeah, I have it defined here. So it's just the risk-free rate, which is, I think it usually like, I use 2.3% as the risk-free rate, but you can look it up if you want to. So it's a risk-free rate plus the beta. So each stock has a different beta times the market return, which I use 10% as the market return, minus the risk-free rate. You can just Google CAPM, CAPM, or capital asset pricing model. But the problem is it doesn't work if the company has a negative beta or they have a really high beta. Then the risk-free rate's just going to be ridiculous. So it's a good starting point to help you just to help you understand how to calculate the WACC. But that's the CAPM is how you calculate the cost of equity. So you have to get the weight of equity. Like if the company is like Intuit is 80% equity, 20% debt. So you have to calculate the WACC and weight it against how much equity they have, which is 80%. Then calculate the cost of debt, which is easy. That's just the interest rate they pay on the debt. And then weight that. It sounds a little confusing, but when you do it, it makes a lot of sense. It's easy. I think I talked about it in some videos. But let me know, like leave a comment in one of the videos. I haven't bought PayPal ever. And I don't plan on buying it. I don't know. I think it's a good stock. I think it's a good company. But I don't think I would buy it. I don't really have a good reason why. I just probably wouldn't buy. Would you buy PayPal, John? If you had extra cash?
Yeah, maybe. Especially if it went down lower, I would buy it. It's a good company. They're going to be around, so I think the risk is minimal. Plus, the Venmo, everybody uses Venmo, and I think Amazon is going to be accepting Venmo now as well. So yeah. I think it's a nice, good, safe stock.
The crazy thing is, if you look at like Alipay, which is like the PayPal of China, Alibaba uses Alipay. Let me see if I can find the video. It's like they transact like trillions of dollars in US, if you convert to US dollars, like trillions of dollars a year, where PayPal is like a few hundred billion a year. Like it's like so much bigger, Alipay.
Right.
And Alibaba owns Alipay. I think Waitr was a mistake, and I'm not too upset about it, but I deviated from my plan. John bought Tesla 2 years ago, and it's probably like 95% of his portfolio, right?
About 90% maybe, or close to it.
So he's up 2,000%.
Yeah, and it just grew in, to that much.
Yeah,
But
that was a good investment.
yeah, it's good so far, but it could
You're up a
definitely
ton.
go down 50%. I've been through a lot of drawdowns already, but just gotta hold on to it.
Anything can happen, but you're up 2,000%, right? About that?
No, my cost, because I bought some shares this year,
Okay.
like in April, May. So my cost is about $100, my cost basis. So
Okay. So are you're 10x?
yeah, about 10x. I mean, the cheapest shares that I bought were like $40, split adjusted. But yeah, Alibaba too. Like I own a lot of Alibaba now, and I'm down a lot on that. But
Alibaba.
I just don't see. I don't think all the Chinese companies are gonna get delisted. I
don't think so either. But the stock should be a lot higher.
Yeah, I think there's a lot of FUD right now, and I think also at the end of the year, a lot of tax loss harvesting as well. So we'll see next year if it's going to rebound.
Yeah, tax loss harvesting. Some people sell stock in December at a loss so they can offset their gains and pay less taxes. So
yeah, then you can just rebuy the stock in 30 days afterwards.
Right. Don't they have to change the rules to allow them to stay listed? I thought the rules are already in place to delist.
I don't think there's any rules to delist, but
didn't they come out with something saying I didn't read? I should have read it. I didn't have time. China, because right now you don't own shares of Alibaba. You own because it's illegal. Like China doesn't let.
It's a company in the Cayman Islands. It's like a VIE structure. So,
but it's kind of like owning a derivative. You're like referencing. You're owning. You still own them.
Yeah, but I think. But all the talk is about all Alibaba, but it's like the same structure with other Chinese companies like JD or Neo. It's the same thing, But I don't know. But yeah, Alibaba should be like $1 trillion company right now.
At least, definitely. Exchange traded notes. I gotta refresh my memory on those. There's so many things to talk about. So those rules don't apply to the holding company. When is Crowd gonna start ripping? Yeah, CrowdStrike. I bought it for a friend, and it was up like 60% in like 6 months, and then it went all down. Like in 2 weeks, it went back down to where I originally bought it at. I mean, Alibaba is it's so profitable, and it's such a well-run company. I think it's just better. It's better than Amazon. I mean, everything about it. I mean, I think it should be easily like if it was in America, it would be fighting with Apple as the top company in market cap.
I don't know about it. I don't think it would be that big, but they don't have the same like revenue as like Apple or anything. But if it was an American company, I think it'd be over $1 trillion company. I don't think Apple's almost 3 trillion now.
Yeah. They have 130 billion revenue when you convert it to US dollars and 25 billion free cash flow.
And what about Apple?
Apple, what about Robinhood? 360 billion. Wow, that's really big. 360 billion. And cash flow 93 billion. Oh wow, that's much bigger. It's not even close. I didn't realize how big Apple was. I mean, let's see, Microsoft, 176 billion. It's a little bigger than Alibaba. 60 billion free cash flow. Okay.
Yeah, but they also 2.5 trillion market cap.
Yeah.
But even if Alibaba gets listed, what's going to happen to the stock? It's just going to be over the counter, or you have to call your broker and change it to the Hong Kong shares, I guess. I mean, the business is still there. And it's not like your shares go to zero or anything like that.
No, you still own. Like if a company gets delisted, I don't know exactly how it's going to work with a Chinese company, but if a company gets delisted, you still own the company, and it usually trades over the counter. But even if it doesn't trade over the counter, you should still be able to sell your shares if you wanted to.
Yeah, you'll be able to sell, but if it gets delisted, it's going to crash probably right away. It's probably going to have 50%.
Hey, I'm Taylor. What's up? You are deleting comments from one of your old subscribers. What does that mean? You're deleting comments. You're not deleting from one of your oldest subscribers. What does that mean, Goldberg? I don't delete comments. There was a time I had my YouTube channel linked to an older email address. The email address I was using at the time, and then I had to switch it to my more current email address because I sold this business I sold it, but so I was able to switch my email address that was linked to my main YouTube account, but they said if you do that, all the comments get deleted. All your comments get deleted. Like not the comments that people wrote, but my replies to all the comments get deleted. Is that what you're talking about? Like I don't know what you're talking about. I'm deleting comments. Are you trolling? Yeah. Matthew, he loves these small caps. He loves like these meme stocks like Sundial. You like Coinbase is not really a meme stock. Bark, yeah, I like BarkBox. It's a good stock. That's a SPAC, right? BarkBox. It started as a SPAC.
Yeah, I think so.
No, it didn't.
No,
because it has to be. SPACs usually sit at
like a year ago.
It IPO'd in December 2020, but SPACs usually, SPACs start at $10 a share before they acquire a company. So it's usually flat at $10 for like several months, but this isn't, unless it just went. Yeah, I don't think it was a SPAC. Let's open it up. See, this may be easier to see. No, it doesn't look like it.
No.
It's got crushed. Wow, since it.
What is Bark anyway? Or is this some kind of
BarkBox?
you get like for your pets.
I got BarkBox. I think it's only for dogs. Every month, it's a subscription service.
Model. Yeah.
So like every month, I get a box in the mail with like 2 dog treats and like you just dip a toy for my dog.
Right.
I liked it, but I had so many toys. I had like all over the house with toys, so it just got annoying. The food was fine, but.
And how much do they charge? How much do they pay per month?
I think it was like $20 a month.
Yeah. Yeah, I don't know what kind of retention they're gonna have.
Yeah, right. The retention. I think they're doing well.
Yeah, like you said, like how many toys do you need? Like every month after 6 months, you're gonna have so much things,
That's why I got rid of it. But maybe it is a SPAC. There's no financial information. Usually this happens with SPAC. So the 86 million in the third quarter. Oh, then it skips 117 million in the second quarter, 120 million. It's not bad. That's why it went down. I mean, it was like $15. Now it's it's about 25% of it. So it was like 2-3 billion at its peak, and now it's 700 million. Yeah, I don't know. It's so hard. Like, you do all this analysis, and people think, oh, I know so much. Just because I could kind of explain the stuff on the financials doesn't mean I can predict stocks that go up, because I do all this work and I think, oh my God, this is a great buy. And then, something changes. Like, the only thing that seems to work is these big stock, like these Facebooks and Googles. That's the only thing that seems to like make me money. Everything else is just like I buy it, and then only 1 out of 10 of these stocks that I like Waitr, or like these like crappy stocks that are like under 10 billion market cap. Like, I hardly ever make money on them. Like,
Yeah,
overall,
you're gonna lose more if you're just gonna invest in like small caps like that. You're gonna end up losing money. Even if you hit like 1 out of 10 or 2 out of 10, you're probably still gonna be down.
because how much can you put into of these small caps? Like 1,000. I mean, unless you're willing to drop 10,000 in each, but you got to hold. People once they see a 30% return, they sell because they've been sitting on it for a year at a loss, and once they see some gains, so it's just hard to like if you get a big gainer, like you gotta wait on it. Like, you can't sell it, and it's so hard because then you wait. Then your stock goes up a lot, and you wait, and then it goes back down, and then you get pissed. There's like 4 stocks. If you invested in one of these 4 stocks, you would have crushed the market. And if you didn't, the past 5 years, you would be like everyone else. Like, if you invested in Tesla, Apple, I forgot the other 2 that carried the market the past 5 years. Did anybody see that article, what I'm talking about?
No. Well, even right now, all the big large cap companies are holding up all the indexes, like the Googles, Apple, Amazon,
Nvidia, Nvidia is another one. That's, if you invest in a few of these stocks at 20x or 10x over the past few years. The thing is, a company like Tesla, like if you see these small caps 10x, it doesn't move the needle at all. But Tesla, it's just such a huge number. And Nvidia, a 700 billion market cap company, they're just such a big number. When they go from 70 billion to 700 billion, it moves the market. Or you can invest in globally diversified index ETF and beat every active hedge funds out there. That's what I do, pretty much, invest in ETFs. And then I was stupid and I invested in Waitr Holdings, trying to change things up.
I'm surprised you put so much money into Waitr.
Yeah, it was risky. So, Impossible Stock News, you got massive profits? What stocks did you get massive profits on? It wasn't Sundial. PaySafe. You got a massive profit on that? It's been down a good amount. You must have bought it. Really? When did you buy it to get a massive profit? unless you got it here and sold up here. Okay. PaySafe is 389. Every time I do a video on like on these like small cap stocks, and I don't say it's a buy, I like have it as like overvalued, I get so much negativity. It'd just be easier just to say positive things because people get so upset. And I was actually right on PaySafe. I mean, of course it could go up. They're like, you're using faulty information. The title's clickbait, not buying it. Like the company business model. I have the stock. The lock appears. I guess you were right. It went down a lot more, but okay. I thought there was a lot of negative. You don't know what you're talking about, period. I have to agree with you. I tried posting corrections. Who cares what you think? There are top analysts that actually know how to evaluate a stock that have price targets way above yours. You're clueless. I hope you have a day job. This guy's Kramer, and there's a picture of Kramer. And I kept writing Seinfeld references, but he didn't get it. I go, why don't you just tell me the movie you want to see? Remember Kramer when he was when he was movie phone? He's like, just like a Rush Street Interactive values for 350, I will make sure that I come back and remind you of PaySafe valuation, and in the meantime, stop smoking crack. And then somebody wrote, start your own videos providing us your genius insights then. And he wrote, I really should because this guy is an asshat. Yeah, except he's not reporting accurate numbers. They get so upset. And it's crazy because, like, you could disagree with an investor, but at least have some. I'm just, let me see what I wrote, the valuation. Okay, see ya, Impossible Stock News. It was trading at 846 when I did the stock, and I valued them at 644.
And what is it now? $4?
So it's even lower than what I said. It's under $4. So it's even lower. So it's funny. Like sometimes I try not to. If it's too far off, I try not to be. But yeah. So that just shows you. But it's funny because even if these people, even if I get in contact with these people and I said, what happened? I thought PaySafe was great. And they'll be like, you're still an idiot. It's going to come back up. Just give it a few more months. Or, they'll probably have a reason. I always I reply to every comment. I don't really mind negative comments as long as I hate people who try to sound smart, like this person. I don't care if someone says, like, even this guy, you don't know what you're talking about, period. I don't mind that. I hate when people say something like that's incorrect and they try to like sound like they're smart. Like this guy wrote, how could you say they're undervalued? They have a PE of 100, which doesn't mean anything. You could be under or overvalued. It doesn't matter. It matters what you're trading at. But anyways, and I just replied, I said, well, PE of 100 indicates high growth, lots of sale, lots of growth in the future. And then he goes, you don't he goes, you should watch Everything Money's channel because that's not what high PE means. You don't know what you're talking about. And then I just copied an article from Investopedia where it just said exactly what I said to him. High growth means high PE means high growth. If you disagree with the bear's view, then you can be much firmer in your conviction on a company. Did anybody know what ETNs are? I gotta refresh my memory. Okay. It's unsecured debt that tracks an underlying index of securities. So it just tracks an index. ETN is going to hold in securities. Okay, that's it. So ETF, if you invest in an ETF, they actually buy securities for the fund. So if you put $1,000 into ETF, they'll buy $1,000 of those underlying securities for the fund. But ETNs don't buy any securities. They just track an index. So it's kind of like a derivative. So if the index goes up, so does that ETN. If index goes down, so the ETN. So there's really no risk unless like Lehman had the ETNs and they defaulted. So all the people who invested in those ETNs didn't get any money. I did a video on Camber. Also, I mean, why do you people invest in these crappy companies? Like, what's the appeal? Because it's low the price, right? And it was high at one point. Is that the big appeal? Oh, I didn't even value it. There was nothing to value. It was 3.25 when I did a video.
What is that? What company is that?
Camber Energy.
Yeah, a lot of these companies I never even heard of, like a lot of the videos that you do.
I didn't hear most of the. I didn't hear them either until I did the video. Look at this. It's trading at 3.25. At one point, it was $240 million a share.
What?
Well, that's because it does reverse stock splits. Does anybody understand this? If you go to Camber Energy,
did GE did a reverse stock split?
Yeah, I think so.
So I remember like a couple of years ago, it was like $5 a share or something, and then
like people look at this and go, "Oh my God, it was trading at $240 million a share. It's only trading at 91 cents. There's so much upside potential." But it's only because they did the reverse stock splits. There was a company recently.
Well, when you do reverse stock split, shouldn't the stock price go up, the share price go up instead of down?
They go up.
Yeah, the share price goes up.
But when you retroactively look at the past, it could.
So if that company, what was it, 89 cents? If they did reverse, what was it, like 10 cents or?
Yeah, every time when a stock gets to $1 generally, or close to $1, the company does a reverse stock split, so they don't get delisted. If you fall below $1, you may get delisted, and you don't want to get delisted. So you do a reverse stock split and you do like a 10-for-1 reverse stock split. So you bring it from $1 to $10. A forward stock split, a normal stock split, like Microsoft, like if you go back, Microsoft, they were never trading at 10 cents a share.
Right. It's already after all the stock splits adjusted.
Some people think that.
Yeah.
But it's only because they did stock splits. They were never a penny stock. I think it was Rig. I mean, anything can happen with these garbage stocks. But you're not really. I mean, you could try it. Like, there's nothing wrong with gambling. Throw money around. The only reverse stock splits help out the shorts because it gives them more to short. When it goes back up, then they have opportunity to short more. But it's generally a bad sign. I think it was this video. One of my favorite. Maybe it wasn't this video. What advantage of a stock split for? There's only one benefit, I think, of a company doing a reverse stock split. Well, the obvious benefit is so they don't get delisted. But outside of that, the only benefit is if a company wants to go private, like they want to not be public anymore. If they do a reverse stock split, it's there's less shares out there when you do a reverse stock split. So it's just easier to delist. That's the only benefit I heard that of. Just invest in globally diversified and live with you. Stop them going at $1. I understand it. Wait, what are your thoughts on bubbles? I mean, yeah, it's possible. I mean, we've been saying it for like almost 15 years now about these bubbles, but I mean, who knows? But you can't just sit in the sidelines and not invest. You lose out on so much upside. And if there is a bubble, like March 2020,
March 2020 wasn't a bubble. That was just
yeah. Well, if there's any type of market crash,
yeah.
Then
do you think we're in the bubble now or no?
Maybe a little bit, but I mean, I don't know how you can know when it's going to pop and.
You don't know if it's gonna. Nobody could tell that, but
I think NFTs are a bubble, but we'll see. NFTs are a bubble. Yeah, I think crypto is more of a bubble. Not Bitcoin. I think that's gonna stay. Bitcoin and a few, but there's just like I think there's like 7,000 cryptocurrencies out there. So I think
most of them are gonna go to zero. But yeah, I think Bitcoin's gonna be around and like Ethereum and stuff. But a lot of the stocks too, a lot of the stock market, we see like in the last 2 months, we've seen a big pullback in like mid caps and low caps, 50, 60, 70%. But I don't know if you're going to see like a huge, like the large caps, if they're going to go down 20, 30% this year. It'd be nice though.
Yeah. I've been using this website. It has a ton of data. I'll show you the website before I forget. I'm using it now in my videos. Instead of doing the company comparison, this website is every company. So it's not just the companies that I did a video on. Like I'm doing Intuit tomorrow, and there's 234 tickers in the same industry as Intuit, the software application. And I'm just showing the top 20 in my video. And I just pulled out like a few, like free cash flow, price to book, a bunch of things. I mean, it's not the prettiest site, but it's like you can pull up each individual ticker. So say you have Tesla, you can do a breakdown of their assets. You could break it down by whatever. There's so many things. Revenue by segment. So you can see the leasing, sales. Sales is like probably 95% of it. So you can do so many different breakdowns. And then this I use a lot. You can do a stock screener. You could see ratings. I use sector data a lot for my videos. You have Canadian stocks. Like if I'm doing a video on auto manufacturers, this is all of them. It looks like. So look, 30 maybe, and you could pick whatever you want. If you want to see all their current assets for each one. Tesla is the biggest. It sorts it by market cap, and you could look at like free cash flow per share. Like Tesla's only has $4 per share. Toyota is $500 per share. There's just so much data. I'm going to try to get this company. I emailed them to see if they want to go on a live stream with me to go through their website. It's businessquant.com. But each video I'm going to have, like in the Intuit video, instead of like the company comparison, I'm just going to have the chart. It's much better than my Excel spreadsheet because my Excel spreadsheet only has the tickers. Only has the tickers of the companies I've done. Like, you know how I have this chart where I go through PE, price, sales. But it's much better because it has everything in the industry. So you can see like the PE. Well, this is software applications, so pretty much almost nobody pays a dividend in this industry. It does cost money. I think it costs $9 a month, maybe. No, $40 a month. But if you pay for a year up front, I don't get anything if you sign up for it. But they did give me a free logon, a free user access. So I kind of feel obligated to talk about it. Oh yeah, we should do another raffle. That's what I want to do. Another raffle. Both the defensive stocks, anyways. Thanks for the tip on. Yeah, let me know if anybody wants it, and I could email them to see if they could. Like, I could give everybody like a free week or something like that to use it. It is really good. Right away, I started using it, and I liked it a lot. Okay, so just say I'm in if you want to be part of the second. Lawrence, DL, John, Anthony, 1, M. Taylor, and so if you think you received any value from any of my videos, you're welcome to donate in the live stream. It'll help me give out more prizes and continue doing all the videos. Goldberg, I still don't know what you meant before, but I was deleting old comments. And I never even seen you before, actually. So I don't know what you mean by old comments, because this is the first time I've seen you. At A to Z. There's 21 people in this. Okay, TJ's Kelly 100. TJ's Kelly 100. I think I saw Mark here. M. Taylor. Okay, so 13 people are in the second. Is there anybody else? Because I see 22 people here. Stock splits, whether it's a reverse split or a regular split, are meaningless. It doesn't change your value.
He just lets investors buy at a lower share price, but usually
you have to remember, if you're a Tesla or a Nvidia and your stock gets up to like 1,000 a share, even if somebody wants to buy $1,000 worth of stock, they, for some reason psychologically, they don't want to buy one share.
exactly.
They'd much rather buy 10
shares.
shares at $100 each than buying one $1,000 share. For some reason, it makes them feel like they're not holding much. So,
but typically what happens when there's a stock split, more people start buying and it drives up the market cap of the company.
Nani, I put Anthony. I thought it was Anthony. Oh, to Nani. Scott D. I hope Scott D wins. Okay, so 17 people. So you have to get picked twice to win. And the randomizer changes. That's a good point. Options trading. Imagine trying to buy options on Berkshire Hathaway. You need $40 million of stock for 100 shares of like 40 million.
Well, you could do Bert B.
Yeah, that's true. You could do B shares, but there's some stocks out there that are like 1,000 or a few thousand a share. A Western Union, that's like Chipotle, I think, is like a few thousand.
Yeah, Amazon, Google, like if you want to sell puts or anything, you need a lot of money for that.
Okay, so let's do the first randomizer. 9, Matthew Plummer. 6, and it has to have changed the number. You can't get the same number twice. Okay, Matthew Plummer. That's weird. The first couple of times I did this, it got a lot of names, but rules are rules. Matthew Plummer, make sure you email me down here, and I'll send you $20. So DL.
Yeah, Matthew wanted you to go over Square.
Okay, so Matthew Plummer, Nice job. Somebody donated $100 last stream. Isn't that crazy? Were you there? Did you see that $100? That was crazy. The Square is now block.
Yeah.
As in blockchain. So everybody, Stockaholics and Impossible Stock News both have channels. Impossible Stock News kind of goes over kind of what's going on in the news about different stocks, but I think he focuses on a few, it seems, like Sundial, Coinbase. But he talks about kind of like current news events. And Stockaholics talks about the tanker industry. And I learned a lot about that industry by watching his channel. It's really interesting. What do you guys think of Vinco Ventures? I never heard of that one. Oh, BBIG. Yeah, it went down like 90%, right? 80% the other day. Oh no, was that? No, that's something else maybe. What went down 80%? Like, you could join my Discord. I talked about it on Discord. Oh, BBIO. Okay, that's BBIO, which sounds like BBIG. It went down like 80 or 90%. It was 41, then it went down to 13. Only a pharmaceutical stock can like 95% of the time, if you see this type of drop, it's a pharmaceutical stock. Oh, Casella is I'll tell everybody what I'm working on. Yeah, Casella. The thing is, the thing I have to wait on is I have somebody doing my thumbnails. Yeah, my email's down here, financial.business.consultant.sr. I have to wait like a week or two for the person to make the thumbnail. But so I think probably next week I should have it done. It usually takes 2 to 3 weeks. So I'm doing Intuit today, tomorrow. Today I did Kinder Morgan, the midstream company. Midstreams are good stocks. Sophie, Casella. So generally up here is first in the queue, but I just have to wait for the thumbnail. AGNC, which is a mortgage REIT. This British company, but I've been waiting forever for Yahoo Finance to update their website. Micron, the semiconductor company. Woof, I think that's Petco. What Woof? I'm doing Waitr Holdings again. Farmy. They it's a Chinese company. They sell mushrooms. SBLK, Triteris, Sibanye, BHP, Rio Tinto, Rolls-Royce, British American Tobacco, SOS, Impala, Wimmy, Tesla, VMware, SoFi. Thanks for
When are you doing SoFi?
probably next week. I'm just waiting for the thumbnail to get printed. a week or two. I just don't know. Somebody who is a paying member asked me to do it, so I'm gonna try to do it. But I did try twice in the past, and I really don't know how to finance companies. I just don't understand like all the stuff on the balance sheet. I don't really understand like all those. It's just a little confusing. So like it's like when you look at a manufacturing company, like a Tesla or like what's it called? Or like like Hershey's, like a food, like any type of company that sells a product. Like it just makes some sense when you look at like the expenses, the revenue, the capital expenditures. But finance companies, I don't get it half the time. So I just kind of. Geo, okay, I have not, which is not offshore partners, which has a really high dividend. OP Polyus, which is a Russian company. Anything that's up to when it OPYGY, when a ticket looks like this, like OP something, it's a I think it's Russian. GoPro. Somebody suggested GoPro. But if it's blue here, that means somebody paid for it. So I got to get these done. And then some of these were requested by people, but they didn't pay for them. Or some of them I just want to do. Petco looks interesting. Yeah, Woof. Woof is Petco, right? Woof.
Yep.
Like companies like this, like it makes sense. Like if you look at like, it's hard to even look at a Google Finance, but that website I showed you earlier, you can pull up the 10K, the 10Q. You could pull up all their financials and it goes back years. Like they have 3 trillion of assets. Obviously, cash is easy to value, but things like derivative assets, forget about that. Like, there's no way I would understand that. But even like loans, like how do you value a loan, and how do you value like future loans, and like, and they have a lot of investments. It's just, it makes my head spin, and I just kind of like stop doing them. But from what I understand, when you value a bank, you just have to look at the price to book ratio, and that's really the best way to value a bank. So there's really nothing to do. Just that's it. 1.85. The lower the better. So if you see their price to book coming up, then probably don't invest. But as their price to book comes down, then it's a better value. And if you track the stock price with the price to book, you should see some correlation. Nikola Workhorse. Nikola, I don't think there's any financial information, or at least last year when I looked.
Yeah, I don't think that. Do they even make any cars?
Their revenue in 3 years is below $1 million. The sum of 3 years, it's not even $1 million. Hyliion. Did anybody see that Hyliion video I released last week? Or I did a Hyliion video a few months ago, but I did another one like 2 weeks ago, and I took it down, the video. which I rarely do. Because I messed up in a video. I said something. Okay, Eddie, I'll see you later. Thanks for coming on. Does anybody like Hyliion? Is that they make
Do they make anything?
It's like they don't make electric vehicles. They
like what? Like hydrogen?
No, they make these add-ons where you could put onto. That's right. Devices they could put onto like a semi-tractor, like a big rig, a truck, to make them more fuel efficient. So they sell like these devices so the trucks can give off less fuel emissions, so they're greener and they're cheaper. But they haven't had any revenue, and they did say, like when this is a SPAC, and when they IPO'd, they said by the end of in 2020 they expected 8 million revenue. In 2021 they expected they haven't got any revenue. So it started at 10 like every SPAC, and then it went way up there. So if you want to make money, if you want to get a guaranteed way to make money, buy a SPAC before they acquire a company when it's trading at $10. As soon as they mention, they don't have to actually acquire them. They just have to mention, they probably just mentioned it around here, or maybe even a little before here. We're going to acquire Hyliion. So everybody just starts buying the stock. And then the actual acquisition probably didn't go through until around here. And by that point, everybody already sold off their stock and took in their gains. So if you want to make a lot of money, buy a SPAC when it's $10. Because it always, pretty much every SPAC looks like this. It goes up a ton, and then it usually falls below the $10 mark at some point. It just keeps going down. Can anybody throw out a SPAC so I could show you any other SPAC how this works?
I have actually. I bought one SPAC. I bought Matterport, but I bought it when it was a SPAC, but not at $10. I bought it like $12 to $15.
Lucid, Nikola.
Lucid, yeah. Wasn't Palantir a SPAC too? Oh no.
No.
No, they did. They just did like direct listing, I think. There was a lot of SPACs last year.
There was as many SPACs last year as ever in the history of SPACs. A PaySafe, 23andMe. It was. They acquired a company right away. They didn't usually it trades at 10 until they find it. So this didn't go up that much. That's a problem. Like if you bought 23andMe at 10, like before they acquired 23andMe, I don't even know if you could have because there's no time. But say you did, you'd have to sell it at a 50% profit because if you would have held on, you would have lost money. Yeah, they need more stimulus check. What's another SPAC? Which one did you say, John?
I bought Matterport, MTTR, last year. It's actually up.
Wow.
It was up a lot like a month ago, and then started coming down.
So did anybody know how to read the candlesticks? So if it's a green candlestick, that means it opened here and it closed here. If it's a red candlestick, that means it opened here and closed here. So you always know the open and close price based off of the candlestick, because it opened here, closed here, then it fell down after hours, opened here, closed here. This didn't really move. But if it's a wick on either side, that means the stock traded outside the open and close range. So this opened at $33.
I think at one point,
what?
No, at one point it went up to like I think $37 or something like that.
Yeah, this day it reached $37.50, but ended up closing at $31. So it traded really outside the range. You don't usually see wicks this big. Like you see little wicks. Usually, but it traded way out there. Stay safe. The problem is if you did my strategy, if you bought it at $10, like the other stock I showed you, it went to 40, right? But like if you would have hit like $18, $19 with this stock, you might have held on waiting for 40. But if you waited, it would have never came back. Now it's trading, you would have lost 60% of your investment. That's the thing. It could 5-10x right away, but it might only 1x, and you don't know. So don't do that strategy. It doesn't work. It only works if the stock. Yeah, that doesn't work. Don't do that.
Yes, but a lot of the SPACs, they trading lower than $10 now.
Yeah. Yeah, Pfizer is one of my favorites. John, what are your stocks? What's in your portfolio?
C Limited, Square, Alibaba,
Square, Baba.
Those are like the bigger ones. Like I have Metaport. I have a little bit like tiny position of Lemonade. What else?
You like to follow Kathy Wood, right?
Somewhat, not everything. I have Unity. So Unity. Let me see what else I have.
Unity.
I have a little Nia. And
if the ticker has one letter, then invest in it. That's a good sign. That's a bullish signal. If it has one letter, like O or C.
C is 2 letters.
What do you mean C?
S-E.
Oh no, I meant the letter C for Citigroup.
Oh, letter C. Oh,
yeah, it's C. I thought it's SEA.
No, just SE is the ticker symbol.
All right, SE. I don't like cannabis stocks. I just don't think they have much upside potential. I just think there's too much risk. I think they're usually good companies, cannabis companies. They usually are, profitable, I guess. But there's just too much against them. Too many people that don't like to buy those stocks, especially the big funds. And that's how stocks move from these big funds. Like when a JP Morgan buys 10% of a company, like 50 million shares, $1 billion, like that moves a stock. Not people like us. We can't move stocks. So generally these companies, they don't have, do they have?
Yeah, Matthew. Yeah, I think Square is a good buy at this prices now. I'm probably going to end up either adding more or selling puts on that. But
Oh yeah,
yeah,
John has a good strategy. He sells puts when he wants to buy a stock, and if it doesn't work out, he just collects the dividend. If the stock
it's not a
price,
dividend.
I'm sorry, it's a premium. Like if the stock goes up, he just collects the premium. But if it drops, he has to buy the stock. He's forced
You
to
don't
buy
have
it.
to buy the stock. You could roll the option to a
Right.
third date to collect more premium, and you kind of offset your loss and collect more premium. But yes, selling puts is a good way to make either extra money or buy stocks at a lower price. You're getting paid to wait for the stock price to go down.
Hashi Corp. I guess this is a cannabis tech, like for this might be a good investment. Like Hashi Corp it's software for cannabis companies. You see, Mark does that too. He sells puts. So if you want exposure to cannabis, I'd recommend something like this, like a company. They just provide the software. I did another stock, something similar, like software for cannabis companies. Yeah, IIPR is good. Is good. At the REIT, right? Cloud computing. I don't have the funds to be selling puts. Because when you sell puts, you have to lock up money, right?
Right. You have to have either cash or you have to have margin in your account, and then it just locks up the margin or the cash.
Yeah, I don't like that.
Why?
I don't like locking up cash.
Yeah, locking up cash. Yeah, unless you have a lot of extra cash that you're willing to lock up, margin, and you don't actually pay any interest on it unless it gets exercised. And I just don't let it get exercised.
So everybody, if there's a stock you want to buy, but you're a little concerned it might go down, like you think the market may go down or that stock, you can sell puts. And if it does go down, you'll collect some premium on the stock. I personally don't like it. Mark, we had this. You mentioned it in a comment before. Because if you're bullish on a stock, and if it runs up and you sell a put, you lose out on all that run up.
Well, selling puts is a bullish strategy. You could do two things. If you want to buy a stock, let's just say, whatever, you want to buy Alibaba at 125, you buy it, but you also sell a put at 130 days from now, and you collect some premium. And if it drops, you could buy more, or you could roll the put.
Yeah, I have to think about that more,
but selling puts, it's a bullish strategy. And the way I like to do it, I like to do it when the stock has gone down quite a bit, and then you could sell a put in the future, like a month or 2 months down the line at a much lower price, and you have a high probability just to collect that premium.
I don't sell covered calls. I've done all that stuff in the past, but I don't really do options anymore. Did anybody see that? This is Waitr Holdings. Did anybody see that TV show with Tillman Fertitta? It was a good show. He owns like a lot of businesses. Like he owns hotels. He owns a lot of restaurants, and he would go to like different vendors. That was the whole TV show. He would go to different vendors, and they would pitch him on their products, and he would like give them like contracts to buy like millions of dollars of their like a company that sells soap. He would buy soap for all his hotels, or This is my goal in life, is to just be on one of these screens for a company. I want to see my name, like in top.
Are you going to be the top investor for Waitr?
I'm not. I don't want to be number one. I just want to be my name. That's my goal in life. Just to be on one of these sheets, one of these screens. I could put all my money into Waitr. Well, technically, I have 100,000 in Waitr. I bought 87,000 shares, so I'm not that far off. I just need to more than double my. But I don't know if they have my name. I think it may have my broker's name. I don't know. Like, it might have E-Trade, not my name. Buy puts on low.
Yeah, Matthew put on to buy leaps if the stock is oversold. I think leaps is great leverage, like especially if there's going to be a market crash, you could really leverage it out. But you are risking if something doesn't go your way because the time goes against you. You could lose your whole investment. Well, whatever you put by, for the leap for.
Leap. You could buy leaps on. You could do calls or puts on leaps, right?
Well, yeah, you could buy leaps, or you could sell leaps.
Look at a fair value at 362. God, I hope it gets that back up there because I have in place. I have sell orders in place. If it hits, I think $3 or $4.
You're gonna wait that long till it gets to $3 or $4? You're not gonna sell it at like $2?
I probably will. I initially had it at that price, but now that it's gone down so much since I bought it, I'm probably gonna sell once it hits. But I don't even track this stuff. Like I don't watch it every day. I kind of like. That's why I kind of regret buying this because I have to kind of watch the stock movements. I like to just buy and not even look at it, the stock market or my portfolio. I literally have gone well over a month without looking at my stocks. Like I do know how much they trade just from seeing that stuff, but I don't like. And then I bought FBRX, another stupid investment. Because I saw they had more cash on their balance sheet. Like the market cap is 31 million. And this is how you learn, people. This is how you learn. You got to make mistakes. Look, they have 45 million of cash. They have no debt. Only 3 million of liabilities.
But they have no revenue.
Well, they have no revenue too, right? But just the cash alone is worth more than the company.
Yeah.
You should watch my Waitr video, but the reason I liked Waitr so much is that, well, let me pull it up. They went, before the new CEO came, they were really struggling. They're still struggling, I guess, but he went from like you see in 2019, the company had 190 million of revenue and they lost 300 million. That they had a net loss of 300 million. Because they do delivery, they deliver food or anything. So he removed lots of cities. Like he stopped delivering to a lot of cities that they were losing money. And he just focused on certain areas. Plus, he changed all the drivers from W-2 employees to independent contractors. So that saved the company tons of money. Those two things. So the revenue, didn't go up too much from 2019 to 2020, but they had actually had a net profit with slightly higher revenue. Because look at their expenses. He cut their operating expenses in half, and he cut their cost of goods sold. He cut them like what 30%. He cut 50 million off cost of revenue, and he cut 70 million off of operating expenses with almost the same amount of revenue. So I was like, he's figured it out. And they're just focusing on rural areas. Like they're not focusing on places like San Francisco or Los Angeles, because Uber Eats he can't compete with Uber Eats or DoorDash. So he knows he's only focusing on areas that have a smaller population, even a lower income. So that's why I thought it was great, like reading all this stuff, what he's did, and I saw the numbers. But they didn't do that good in the third quarter. I mean, their revenue went down. They did have a net profit, but that's only because they passed through a $16 million gain. But they had an operating loss. Like I think when I did the video, it looked like they were profitable. Like they had operating profits, and now they have 2 straight quarters of operating losses. It's not big losses, but that's my thesis. Just those 2 things are the reason I invested. Let me show this website. I hope they're in the website. They are good. The good thing is it goes back for a long time. See, look, it goes back to 2015. Not that I need it, because the new CEO okay. So you see the revenue, quarterly revenue. Well, they actually had quarterly revenue. I wonder if this is just they couldn't pull the information. They probably didn't provide this information because they probably just went public around here. 22 million, 12 million, 16 million. That's a big drop. 22 million down to 12 million. They hit 50 million revenue in June 2019. But look at their operating income, negative 23 million. Because they were paying all their drivers. They were giving them salary. So if they pay, I don't know if they paid benefits, but they have to pay a lot of taxes. It kills them. So they were doing great. They had 1, 2, 3, 4, 5 straight quarters of really high operating income. June 2020, right in the beginning of COVID, they were killing it. 60 million revenue, 14 million of operating income. That was their best ever. It is coming down because COVID helped them a lot because people are stuck at home. But they're also focusing on restaurants. Like if you go to a restaurant, and you could just take a picture of the QR code on your table and then order food in the restaurant. It's a lot cheaper for the restaurant because they don't have to have a waiter or waitress go to the table, get the order, come back. The manager can just see what each person's order is and have just a couple people deliver the food. So they're working on that also. Right. There's definitely no barriers to entry, and or no mode that, because a driver can go to any. It's kind of like Uber too. Like if you drive for Uber, you also drive for Lyft. Like if it's your job, your full-time job. So there's really no it's not sticky. You can't really get people to stay. If I have problems with Uber, I haven't really. If I had a bunch of problems, like the drivers weren't picking me up, they kept canceling, and I had to wait too long, I would just go to Lyft. It'd be too easy to switch over. But generally I wouldn't invest in a company like this. I was just doing it as a test. I think a lot of people like the delivery and willing to pay for it when I was in college. I do too. I think delivery, there's a lot of benefits because people don't get, it's not just food. If you go on their app, you can get stuff from grocery stores. They deliver cannabis now. Like if people don't, their car's broken down, or if they're sick, or if they just don't want to go out. And COVID is not going away. If anything, it could get worse with the new strain. So I don't think they need COVID to succeed, but it definitely helps to force people to stay home.
Yeah, but if people are going to order, it's just convenient. It doesn't matter COVID or not, but there's a lot of competition in that space.
You ordered at the Apple Store and there was a courier option. And guess who showed up? Waitr? I don't know. Who showed up? Sales, the cost of the food plus delivery charge. No, sales aren't the cost of the food. Sales for them are their fee. Like they get like, I forgot what it was, like 3% of each order goes to Waitr, plus there's credit card fees, and I think certain towns have additional fees. Oh, Uber. Okay, got you. Of course. I mean, Uber is definitely number one. So they can't compete with Uber. That's why they're focusing on certain areas. So if you live in a place with a population above 100,000 people, you're probably not going to have Waitr or whatever company's Waitr. But yeah, I was, because right when I bought it, right when I did a video, Morgan Stanley bought the stock. It was trading like 85 cents when I wanted to buy it. Then Morgan Stanley bought the stock. Like it was right here when I wanted to buy it. It was like 85 cents. Then Morgan Stanley bought it, and I ended up getting it at 119. And I was up like 70%. I thought I was a genius. I was up like $70,000 after like a week. And now I'm down like $20,000. But yeah, I wanted to get it down here. But I thought it was it just seemed like there was not much downside at 80 cents. I did get it at 119. And look, it was a SPAC. As soon as it starts trading, boom, it just goes right down. Like a month, it goes down to below $1. It went down to 30 cents. Was there competition? I never tipped my drivers because I was broke. What do you mean I don't like seeing acquisitions? You don't like seeing companies you own acquire other companies? Is that what you mean? So, John, what do you think?
What about Waitr?
No, should we call it a night, or what do you?
Yeah. I mean, I'm about to go anyway. But yeah, it was
Okay.
fun.
Wait 1 second. No, I mean, do you want to say something or?
No. Thanks for having me on. It was fun. And I look forward to your other videos.
Yeah. Guilt. I'll try to. Yeah. Thanks everybody for coming on. Let me know. I do this every Saturday at 6 p.m. So not this Saturday because it's New Year's Day. I'll go back to Saturdays. But yeah, leave a comment if you have any questions about anything. And thanks for joining. And I'll talk to everybody later.
All right. Have a good night, guys.